Welcome to the Real P&L Show, where I share my real P&L on 3 accounts. I also share my proprietary Safe Wheel option system for free. And let me get my screen back up here. Okay. And also, first, I want to make sure you guys can hear me okay. Sometimes I have problems with the audio, so let me know. Also, post any questions you might have, anything about the trading systems that I'm trading, or anything about options in general. I've been trading options for over 30 years now. Okay, so first, let's see if you can hear me okay. So Neil and some guy says, sounds good. All right, great. Thank you. I appreciate that very much. Next, let's go into the earnings edge. What happened last week? Last week with the earnings edge, I traded Costco. I like Costco for some reason, and Costco seems to do quite well. What I do here? Costco. Bring in the spreadsheet here. You can see Costco here up $980, but that was, I think I've traded that twice this year already. So that's not the actual number. Costco, I made $418. So my record now is 27, 19, and 8. So you can see that I'm going away from the 50-50 win rate. I'm starting to take profits a little earlier. And I think I like the way that taking profits a little earlier is working for me, and you're going to see my win rate increase, but my average win, how much I make per win, is going to go down. So I'm at 732, and then I lose about 540, but I have 27 wins versus 19, and then 8 break evens. The actual price for the account, let's see here, that lick, 11,673. I'm going to put that in here. 11,673. And what is SPY trading? SPY 529.42. 529.42. Okay, so you can see that so far year to date, SPY is up around almost between 11 and 12%. It's doing quite well. The earnings edge is up about 22%, but on a risk-adjusted basis, might be underperforming just a little bit. It's pretty risky, the earnings edge. But overall, you could see that since inception 2022, I've up 133%, where the S&P is up 11.4. So since the beginning of 2022, the S&P really hasn't done too much, and the earnings edge has done quite well. The account's more than doubled. Okay, let's talk about the Premier Level 5. How's a Premier Level 5 doing? This is a very conservative trade. Let me, I can't show you the whole screen because then it'll show my account number, which I don't want to show here live. So 33,858. Let's see how that works out here. 33,858. 33,858. Down about 3.5%, up about 12.86%. This gives me about 1/3 the drawdown. So on a risk-adjusted basis, you could basically multiply these times 3, multiply this one times 3, and it's just barely outperforming, probably pretty much at a break even with the S&P 500, but the drawdowns are only 1/3. So I like, when I have a lot of money at stake, I like to keep the drawdowns super low, because when I'm coming out of that trough, I want to come out of there really good and nice and fast. The system doesn't do as well when there's no volatility in the market, and over the last 6, 7, 8 months, maybe, we've seen only one time where the pullback of the market was higher than 2%. I think in April it was around 5-6%, and when that happened, the system made money, but it doesn't really lose money when it's not performing as well. Okay, let's talk about now the Safe Wheel. Let's go into the Safe Wheel account. That would be this account here. Let's see. Yes. And I got 6503 is my net lick. 6503. Let's put that into the spreadsheet. See how that's doing. 6503. 6503. Okay, safe wheel this year, uh, up just barely, 1.5%. You can see overall up 30% since I started running it in April, no, not April, but in the beginning of 2022. So, with the safe wheel, the drawdowns are about half of what the S&P are. So you can kinda, on a risk-adjusted basis, you can double this number, but I'll just call it 30% here versus 11.5, vastly outperforming, since, 2022 when I started trading this, live right in front of you. You've seen, except for my long calls that I put on every Friday, you've seen every trade I've made in this account. Not sure. There are a couple of us that show every trade we make in the account, but not too many of us. And one of the things that's different about me is that all of my positions are hedged. So if there's a market crash, I'm not going to get hurt that much. I might go down a little bit, but I'm not going to get annihilated. I'm not going to lose, 25, 30, 40% of my account, and then not be able to recover off of it if the market doesn't recover. Like if the market crashes and then it doesn't come back up, I'm going to be just fine. That's the difference between my systems and a lot of other systems out there. Okay, looking at LI, you can see down on the year on this one. Let's take a look at the positions here. I think I showed the net lick, right? Okay. So what's going on with LI? It looks like I own 200 shares. So what's happened is LI has come down significantly. What is it trading at? $20.34. So I got assigned at LI at 28.50. Right, that's pretty high. And then I got assigned again at $21. So I've been assigned twice on this system. I've got my capital allocated on purpose to be long possibly 200 shares, and that's currently what's happening. I am long 200 shares. I'm not going to sell another put and possibly be long 300 shares. I'm not going to do that. I've got the $24 put here that's protecting me. That's why it's called the safe wheel, because I've got potentially long or potentially short 300 shares here. And I am at the $24 put. So first thing I want to do is check my hedges, make sure my hedges are in line. So I've got my put hedge where I'm long 3 puts at the $24 level. So this is in the money, right? Now, my question here is, am I under 100 days? Because is it depreciating too fast? No, so I'm good. The other question is here, is the $24 strike close enough to the price of LI? Is it within 75%? Well, it's actually in the money, so it's 100% close, or it's in the money. So I'm not worried about the put hedge. It looks good. Then I have my long $25 call that expires at the end of the week. Paid 5 cents for it. It's worth 2.5 cents. So this is just to protect my put hedge. So my hedges look good. Now I'm going to work the traditional wheel. And the way that I do it is I look at whether I can sell a covered call or not. Now I want to make sure that I want to sell that covered call out of the money or at least at the money. Well, again, my price at 28.50. Let's take a look at that. I want to do these also in the nearest expiration that expired this Friday. Today's Tuesday, so I won't get as much premium. So at the 28.50 level here, can I sell a call at around at least 20 cents, 21 cents? The answer is no. Now, my other assignment price was $21. Can I sell a call here at least 20 cents? And the answer is yes. So that's what I'm going to do. I'm always going to be collecting premium. I'm going to sell a covered call against half of my shares. And this right here, this 28.50, I kind of look at it as a wounded soldier. Maybe it'll come back. And I'm just sitting and not collecting any premium on that. But I'm always going to be looking to collect premium. So I'm going to sell here at the $21 level. I'm going to sell one, mid price 25. Okay. So let's see if I can get filled there. Working order. And maybe I'm going to get $24. Yes. Okay, so it filled here, $24. So I was able to sell some premium. I couldn't sell against both of my 100 shares. I only was able to sell against the 100 shares where I was assigned last week. I was assigned at the $21 level. So this price right here, $24.75, looks like they took an average, but I don't use the average. I use the assignment price that I initially got assigned at, $28.50, and then the $21 assignment price. I'm able to sell premium against that. So if you get called away, I won't lose any money on those 100 shares there. Okay, so that's really the trade there for the safe wheel. Let's see if there's any comments. Another thing is interesting with my live stream, I actually interact, and if you have a comment, I'll answer your questions. And I don't see a lot of instructors, YouTube instructors, that are willing to come on and actually interact. And I think the reason is because they don't share their P&L. And so people are going to ask them, where's your P&L? Can you show your P&L? And they're not going to have an answer for that. So I think a lot of times that's what's going on there. Okay. Janos has a question. Hold on a second. What's going on with my... Well, he had a question there. It looks like it went away. Okay. Oh, here it is. All right. So Janos has a question. Is it possible to automate the safe wheel strategy to use some kind of algorithm on the trading platform? If there is, I don't know about it. I'm not, I don't know how to write code. And this particular platform, Thinkorswim, I'm pretty sure you cannot do it. But there might be some type of integration, some type of system that can do it. But I don't know the answer to that. Good morning, Kevin. LI, taking the safe wheel for a ride. Yep, right now it's taking us for a ride. We'll see how it works. Interesting though, because my put, how much am I up on this? $936 of protection there. Nice, right? If I was running the traditional wheel, I'd be down another $936. Why can't this strategy be done on indexes? Well, I want to get assigned. So if I run it, say, on SPX, I won't get assigned because you can't own stock there. Let's say I run it on SPY. SPY doesn't have enough premium. I want to be able to collect. When I get assigned and I want to collect, I want to be able to get 1% at the money. So let's say I was going to open up a new position and I wanted to go out of the money. So $20 would be out of the money. I want to get at least 1% of what I'm trying to collect here. So if I want to get at least 20 cents, if I was doing SPY, I wouldn't be able to collect enough premium. I'd have to go in the money to get enough premium to get that 1%. So I want to use stocks because they have more premium to collect. Will says looking pretty good for the safe whale position this week. Yeah, well, LI, let's see, it's up or down 1 cent. It was up earlier. Obviously, I'm long, right? I prefer that it goes higher, but even if it goes lower, I'm okay. I have the long 3 puts. Will says the 3 put protection is so strong, won't even hurt if it drops again this week. Yeah, absolutely, because it's in the money now. So what are my deltas? I wonder what the delta is of that particular. Dollar, I get about $62. So it's pretty strong, pretty solid. And as it gets further and further in the money, I get deeper, my deltas get higher and higher. And it almost moves on a one-to-one basis, or it gets closer to doing that. Less is more. When you show your latest account money in Excel spreadsheet and the yellow cells are the realized figures or the account value, realized and unrealized. The account is net liquidation, which means it's realized plus unrealized on everything. So it's net liquidation. So it includes unrealized. I think unrealized are very important. You don't, just because you're unrealized, if you have a realized profit, but your unrealized profits are actually taking you down, you can actually get margin called, right? So yeah, you don't take the loss, but you can get margin called though. So then you're going to be forced to take a loss. So unrealized is super important, and I share unrealized, which is a net liquidation value. Net liquidation is the truth. I mean, here it is. This is what you want to see when you see someone's account. And you want to see their total portfolio, right? Over time. Somebody might make some money for a month or two and they'll show their net lick, but then they'll stop sharing it after a couple months. Why is that? It's probably because they lost money. They don't want anybody to know. Neil says, great session. Glad I was able to listen live for once. Oh, a reminder, click that like button. I'd appreciate it if you guys click the like button, because what that does is it helps more people see this. And I think it's important for people I'm trying to change this industry. I'm trying to get all the instructors on YouTube to share their real P&L, to share their net liquidation. And I think the more people that get involved, the more people that see what I'm doing, the more that the expectations are going to be risen. And then people are going to be asking their instructors to share their P&L, because there's a lot of stuff going on out there that if they don't share their P&L, they're able to hide a lot of things and give you their whole systems are designed to deceive. Okay. And the way to get around them designing and deceiving you is to force them to share their P&L and their portfolio over time. And if the more people that can see what I'm doing, we can create a little army of people going out there forcing these instructors to share their P&L. So that's why I ask you to hit the like button. Okay, any other questions here? I want to give it a little bit of time. Sometimes I run out of, I'm getting ready to close the session out, and then someone has a question at the last second and I kind of miss it. Okay. All right. Well, in parting, I like to say, if the P&L is not real, what else are they trying to conceal? I'll be back next week.